Okay, welcome out there, my mortgage people. Sorry about this. I spilled my coffee earlier, and my camera isn't working anymore, and my stream deck isn't working anymore. But you're not here for that. You're here for these things over here. So let's get over to it, folks. What I want to do in today's video, you're going to start seeing a lot of things about stagflation right through here. We're going to talk about that briefly. Also, there's a new Federal Reserve member. Now, it's not the chairman that a lot of people were hoping for, or I guess, cheering for. It's just a member that actually resigned. Their tenure was up in January of 2026. They left early, and so President Trump is trying to assign a new person there. But we're going to try to figure out with the news that we got this week, and the news that we got this today, and the news we're getting next week, how that's going to play a role in over here, folks. So what we're focusing in on, what's going on with tariffs. I'm going to explain to you stagflation, and is the Federal Reserve, are they a little bit late to their rate cuts? That's what we're going to talk about in today's video, folks. So let's get over to it. Here's what we're seeing with mortgage rates today. They upticked just a little bit. So those that are not there familiar with how mortgage rates work, folks, mortgage rates, they kind of tick around all day long. So if you get a quote from us at one time and then maybe an hour or two later, you might get a different quote. Don't think we're trying to, pull your leg. The markets are moving. So, sometimes you don't even see a little bit of a move like this you're seeing on the screen, but it happens behind the scenes. So just want to make you guys aware of that. So let's get over to this. I want to clarify some news. President Trump just nominated somebody to the Federal Reserve, not the Federal Reserve chairman. Okay, this young man this gentleman, he's called Stephen Miron, and he's a part of the Council of Economic Advisors. So Trump's putting him in a Federal Reserve seat that was vacated by a young lady that she exited early, and her tenure was up in January, so just a couple months early. So that's what you're seeing through there. So it's not the Federal Reserve chairman, folks. It's just a member of the Fed. Now, another piece of the puzzle you're going to start seeing, and this hit, I think, the headlines today, August 7th, so that was yesterday. You're going to start hearing stagflation. Now, folks, we don't want stagflation, because what that is that's a stagnant basically economy with inflation jumping up, and that's the worst scenario for the Fed. So is the Federal Reserve late on cutting? Well, that's what we're going to look at some details here. So here's what the Federal Reserve looks at, and we got a lot of inflation numbers coming in next week. We have the CPI, consumer inflation. We'll go over that with next week's calendar. We got the PPI. We got retail sales. We got a lot of things that's going to fill in some of the gaps here, and we'll get the weekly jobless claims and continued claims, because we're going to start focusing in on those weekly to see where the job market's actually taking us, and then we'll focus in on the CPI and the PPI next week on where the inflation numbers are going to get. So we're focusing in on this, but the Federal Reserve, most likely, there's, I think, a 90% chance, or pretty darn close, that they're going to cut rates at the next meeting. So here's what I want to show you guys. Here's what the stagflation stuff means. Just the odds of what's going to happen and so forth. So I just want to present this to you. Okay, U.S. stagflation risk outlook for 2025, 2026. Okay, so here's what I did. I took a whole bunch of articles in regards to stagflation, our economic data, and I said, AI, just create a little spreadsheet on what the expectations are on this, and just use your algorithms and just give us the most obvious outcomes. And here's what it came up with. Okay, so stagflation light. Here's some situations we might get, and the odds of it right through here. So stagflation light, that's kind of middle of the road. So we'll start at that. There's a 35 to 45% chance of that happening. But how this could happen is growth slows. Well, GDP is still going, folks. So watch that. Inflation drifts higher. It's drifting higher, and unemployment edges up. Well, that's edging up. So all this is going, but the economy based on the GDP is still going pretty good. So between this and the soft landing is the most prudent outcome, but you can't have a full-blown stagflation. What could cause that? Not a big chance of that happening, but high inflation, significant unemployment, and stagnant growth. So could it happen? Absolutely it could happen. Is the probabilities there? No. What I try to explain to you guys, and again, I try not to get partisan. I know everybody's like MAGA Dan and all this other stuff. Folks, I just want what's best for you and me. Okay, and I want to put a lot of this just to common sense. What might be common sense to me might be a little bit different to you. But what I look at is the national numbers, things, in general. And if you really want to get specific, like if you want to figure out what your home price is doing, well, don't look at the national levels. Just look specifically at your community. Okay, so that's that. So when you look at everything on a national level, here's kind of the odds and everything that's going to happen. And this is per AI. So why the odds moved up this week? Well, inflation pulsed less friendly. We got the PCE came in at 2.6. Here's the number that I want you guys to see. The ISM servicing paid, that jumped, and then also globally we had the ISM servicing numbers. These numbers came in recently, and I think they're on this week's calendar. And I usually don't pay attention. Yeah, it was right through here, the ISM. And then there was another data point that came in the next day. These numbers really showed inflation taking kind of a pretty big jump. And we talked about it on that day. So it looked like it was on Tuesday. But that's part of this. But let's go back to this. Some of this is, yes, it's tracking inflation going up. Tariff shock, average tariffs 18 and 19%. There was an article we read this morning said it was the national is, well, the basis line is 10, so there must be some that are much higher than that we know, like Mexico and things like that. So those are getting worked on, but the aggregate night right now is between 18 and 19%. This is about half of what everybody was expecting. Remember, we thought 35, 40%. So we'll take that. So what's the outlook changes? Well, upside, reduced risk, cooling core services inflation, softer shelter costs, or there might be downside risk of faster tariffs pass-through, oil spikes, and deepened payroll. So I don't think this is going to happen. I basically just think we're going to be stagnant right now. And a lot of data is just waiting and waiting to come in. So that's part of that. So let's get over to see what the markets did today. The market, it's still going up. So we got, I don't know if the S&P is still at another record high, but we have the S&P up today. We got another, I call this a Cinderella story. So folks, if you watch me daily, this is kind of what I say. When this is across the board, we know people are making money. If the markets are up, well, if you're invested in the market. Now, you can make money, believe it or not, when the market goes down, and that's selling short. Most people don't do that. They buy long. So that's what that's called. When you buy a stock, you hold it for a long term, hoping for appreciation. That's called a long position. We got the VIX down. Look at the VIX is down 7% to 15. So the markets are just chilling today. I think they started their TGIF a little bit early for the day. So across the board, pretty good. Let's see what the oil's doing. 63, folks. This is going to help the inflation. Well, let's say it this way. It's going to offset some of the tariffs that we know are going to be inflationary. We know it's going to happen. Okay, so that helps there. Let's see what the bond market's doing. Bonds are up 0.04. This is kind of the, I thought people would be moving their money more into bonds and so forth. Maybe they're just moving it into treasuries or just cash positions to kind of come and go as fast as they can. But there also might be some profit taking because rates did pretty good this week. So we go over to the bond market. This is what we follow on a daily basis. Let's look at for the week. Basically, it was like flat as a pancake. We had a nice reprieve right here. Guys, what you have to realize is as the price goes up of this bond, so if you're new to the channel, here's how this works. Here's how we focus on rates. Is the price of this bond goes up, rates go down. Okay, so we were trying to get people to lock in over the last, on the 7th, and before we started seeing some movements in there, but some people always want just a little bit more, and that's why I come out and say, pigs get fat, hogs get slaughtered. Please, folks, if you're saving a bunch of money, the 0.1 that you might save might be a difference of $8 or $9. If that's worth it for you, I get it, but it might not be worth all the headaches that you have to go through for that, all that aggravation. I'm just saying. So now let's get over to the economic calendar we have. Let's recap what we saw this week, and we're just going to go just the small variation of this, and then we're going to go over what's coming next week, because this week there wasn't really much other than the ISM data, and I really haven't talked that much about it. So as this data comes in going forward, we'll talk a little bit more about these and how these are kind of give us the inflation a look ahead, I guess is the best way to put it. That was the only data in this week other than initial jobless claims and the jobs continued jobless claims, and they were pretty much in line, but the continued jobless claims continue to rise, and that's a little bit scary because as that goes up, as people losing their job, it's not good for any of us. The whole economy, it's a bad thing for that. So let's go over now to next week's agenda. So here's what we're looking at next week, and a lot of these will be moving the markets. This week, basically, it was snooze fest. We had a fantastic market last Friday. That's when rates just plummeted, and then they continued to ease up until about Wednesday of this week, and then if you didn't lock then, you missed that little bubble, but it might be back next week. So pay attention to this news as it comes in. So here's what we got coming across the headlines right through here. I think I might have created let's see if I created something for this. I don't see my downloads. My computer's acting up, and I don't know why. Well, I dropped coffee on it, but I had a spreadsheet to go over with you guys of this. But here's what I want to show you for next week. Tuesday, Monday, nothing. Tuesday, here's where the data comes in. Now, I want to explain to you guys there's 4 different things here. Then you might say it's CPI, core CPI, whatever. What is this? Okay, so basically this is consumer inflation. This is what you and I see. Okay, what core means is they strip out food and energy, like oil. You see oil sometimes at $80 a barrel, and then the next time it's $65 a barrel. So what they try to do is they try to pull out those numbers to smooth out and just have a smaller component of what they're watching. And that's how that works. So what you're going to see is core, and then you're also going to see YOY or MOM. That's year over year and month over month. So let's go down through what they're expecting next week, and I will be recapping these each morning, but I just want to show you the thoughts here and what you might want to look into over the weekend. Okay, so here's what we got. We got core CPI coming in. They expected it to go from 2.9 to 3. I might have to agree with them on this one, but again, it strips out food and oil, food and energy. So where's that going to go? We'll monitor. The month over month from 0.2 to 0.3. Well, if this goes up, then that's probably going to go up. Okay, but last time when we focused on the PPI, it came in just a little bit. Here, let's see what this number came in at. Last time it came in at 0. Let's see what the history of this is. And the reason being is I like to look at the PPI. What this is let's go back. Over here, this says CPI. Think a C on the front of that is consumer. Okay, you scroll down here, and now you're going to get the PPI. The P on the front of that means producer. So we're going to watch the materials flow through the system. We watch materials and things like that, and then we see, okay, how much does it cost to produce it, wages and things like that. So we're getting over here. So producer inflation, let's look at the last few readings. In July, June, May. Let's just go back a few months. Previous reading was 0.4. It came in at a negative 0.4. Then it was supposed to come in at negative 0.2. It came in as a positive 0.1. Jeez, these are all over the map. And then it was revised, I guess, to 0.4. It's all over the place. So we'll pay attention to this, but let's see how the markets move to it. If you look at these, what it was expected, what it was forecasted, none of them really came out. So we'll kind of throw that out with the bathwater on the PPIs. But that number's, since it's a little murky, well, you don't really know what's going to go on with this. What we usually focus in on is we focus in on the PPI, and then as it floats over to the CPI, we can get a more accurate read of there. So sorry to talk all these just abbreviations, folks, but we'll get to the nitty gritty here in a second. Okay, and then we just get to the CPI. It includes everything. Okay, this is going to be dependent on also. Well, look at here's what they're saying. The CPI month over month with everything included, it was 0.3. Expected to go down to 0.2, a drop. Could that be energy? Because this includes food and energy. So is food and energy really dropping? Good sign, possibly. And then year over year, expect to go from 2.7 to 2.8. So they're expecting it to basically go 3 out of 4 numbers are supposed to come in a little bit higher than expected. I don't know what they're going to come in at. So we'll monitor that and see how the markets react to that. Then what we're going to have on Thursday, this is going to be a big day, and this is going to be a lot of information that we need. Continued jobless claims and initial jobless claims. So how many people got let go? And they're expecting it. Well, they didn't even put a quote in here because they're never accurate. So they're going to say this is how many people lost the jobs for the first time, and this is how many people continue to stay on unemployment, just having a tough time getting a job. If this continues to grow, that's going to be a major concern. So on Thursday, we're going to get the PPI and then the jobs report numbers. Then on Friday, we're going to just start getting some number about core retail sales and things like that, just to show us how the consumer is still faring. And then again, how much the economy is growing. Right through here, we're going to get to the Atlanta Fed's, their targeted GDP, and they're expecting it to be at 2.5. And that's the Atlanta Fed. You go over to the national numbers with the Federal Reserve monitors. They have it at 3% right now. So stagflation, I don't see it because the economy is going right here, but we're going to continue to monitor the unemployment number. So folks, if you got any questions, I do have some people here, so thank you so much. I didn't even check the questions. I am here for the questions now, folks. Sorry about the images. Like I said, I spilled coffee. Some of my systems are working, some aren't, so I apologize. I'll have myself fixed up for Monday's videos. So let's get over to any questions that you guys have. You can ask me questions about the stocks, bonds, cryptocurrencies, and I'll get to our portfolio here in a second for those that watch me on Stock Talk Tuesday. We'll we'll go over and see how our stock portfolio is doing here in a second. But let's get over to Chang. I'll say it that way so I don't want to completely botch your name, so my apologies. Any chance of rates dropping in September, rest of 2025, and a new Fed chair in 2026? So my expectations here, I'll give you my short-term, my mid-term, and my long-term expectations and why. Okay, so short-term, I hope things just stay stagnant. Okay, it's going to be tariffs. I think most of the tariff news is through. There's still some things that are needing to be worked through. I think those are going to get worked through okay. So the tariff news is going to be, I think the dust will settle there. These are my thoughts, folks. So you're welcome to post any comments you want down below. You've asked. Okay, so that's what we're seeing on that part of it. In the employment numbers, I think once the economy, once the tariff uncertainty, I'll put it that way, uncertainty goes through the markets, I think a lot of companies are now at the point saying, okay, we still are continuing, and we're going to see next week on the retail sales, but if people are continuing to buy, well, people are going to continue to need employment. So that'll just, our whole economy is an economy that, churns our money. So you pay it out, and everybody complains about the millionaires and billionaires and all that stuff, but our average people, like me and you get paid, you pay your mortgage, you pay your car payment, you pay your bills, you just go out and have dinner, do it, and you just cycle through the money. I get it, and that's what we all do on a daily basis. So, that's where we've tried to focus in on this channel of the things that affect me and you directly. So here's what my thoughts are on this. I think midterm, the Fed's going to cut. They're going to cut in September. I don't think that's going to be end-all, beat-all. But there's a specific thing that the government just did. And when they had a bond sale yesterday, they did something intriguing. They started putting them on T-bills and not Treasury bonds. And there's a big difference there because one is a short-term note and one's a long-term note. So the reason why I'm bringing this up is if the government and the people that control all this stuff, if they're going out and they're financing their debt short-term because they don't want to do it long-term thinking, okay, rates are going to come down, that's their thought. And we're talking billions and billions of dollars here. If they're financing short-term, you pretty much, if you think it through, they're thinking, well, long-term rates are going to come down. Otherwise, you would, get in the long-term and just stay there and be okay. So I think they're funneling a lot of this debt short-term, hoping and doing everything they can in their powers to bring down rates so that when they have to refinance these again, maybe they can put them on bonds instead of Treasury bills to extend out that term, lock in a lower rate, and move from there. So until the Federal Reserve moves on these rates, mortgage rates are going to be about 1.5% to 2% spread above this rate that you're seeing on the screen, 4.25%, 4.5%. So when people ask me, Dan, when's rates going to get to 5? Not until this gets to 3.5%. So there's going to be 100 basis points that needs to be pulled out of the federal funds rate for any chance of mortgage rates even hitting the 5.99999. So that's kind of the thoughts there. So if you're sitting on the sidelines waiting for 5s, you're not going to get it. I hope maybe we can get to 6.25, but my long-term, and I've been saying it for the last year, my long-term Q3 goal was rates at 6.5, and I'm thinking, 6.5 through the rest of the year unless a lot of just pieces come into play. Now, long-term 2026, the tariffs will be behind us. That'll be another thing. I think we'll have a new Fed chair. They'll be a little more aggressive, but I think before then we might already have the cuts that we need. But only time's going to tell. So thanks for your question, and sorry for the long answer, but sorry I'm long-winded. The weaker dollar isn't talking about enough. Its year-to-date decline is greater than the market's gain. Fantastic. But that has a role in some of this, and I thanks your. This is what I love for people to do. If you would put in the data, my whole goal is a platform so people can post things and learn. What I don't want is, the market's going to crash 500 points and this and that. With you don't know. Okay, that's why I come out here and try to say, folks, I don't know. I'm just here to post the news for you. I'll give you my 35 years of in the business and watching this stuff and being involved in the market and what I think is going to happen. And that's my thoughts. If I thought the market was going to crash, or the stock market's going to crash, or the housing market's going to crash, why wouldn't I tell you? There's no reason why I would hide it from you because I don't, I'm in the mortgage business, folks. Let me explain to those that are new here what I do. So I work at a federal bank, and I think a lot of people still don't understand what I do. So I work at a federal bank, all right? But we are a huge mortgage brokerage. That's the best way I can put it because we're set up with 33 other lenders. So I have the ability to work your loan with me, And I can also work your loan with 33 other lenders, but I will facilitate the whole thing. There is not a broker fee involved. So if you want to learn more about what I do and how I do things and you're looking to buy or refinance, I'll give you all my information at the end of this video, folks. So stay tuned for that. So let's get over to what else? The Federal Reserve. What are they going to do now? So the the CME, the Chicago Mercantile Exchange, they put this site together years ago, and I've been following it for years, and mainstream media picked up on it last year, which was kind of cool, and it tells you kind of what to expect from the Federal Reserve at the next meetings or so. So right now we know the federal funds rate is 4.25 to 4.5. All right, that's right there on the screen. But if we go over to the federal funds thing, let's go down through here, and this is what is the likelihood that the Federal Reserve will change the federal funds target rate at the coming meetings. Okay, so we go down through here. I'm going to look at aggregate. This is going to combine all the stuff and say, okay, there is we'll say it's a 90% chance that the federal funds rate after the next meeting is going to be 4 to 4.25. That means if it's 4.25 to 4.5 now, they're going to cut by 25 basis points. And I think that's a consensus vote. Right after the Federal Reserve met last time, the way they verbed everything or worded everything, there was basically a 50% chance of a cut. Now there's a 90% chance of a cut. So there's most likely a cut on the table. Does that mean mortgage rates are going to drop? Nope. What happened last September, folks? Well, last September, let's go to the bond market. And this is a perfect example of this. This is why I say, I'm sorry about it, but pigs get fat and hogs get slaughtered. All right, so here's what I want to show you. September, the bond market was 101.64. At that, the rate was 6.2. There was a ton of people that are at 8, 7.75, rates like that, and they wanted better, and they just wanted better. What happened? It plummeted. What happens when this plummets? Rates go up. So rates went all the way up to 7.25, 7.5, right back through here. What happened again? You got another reprieve, folks. What happened? People wanted to move all the way back up to here again because I got that in the past. Well, you got 2%, you got 3% in the past too, but you have to look at what the world is as it is today. So missed it. So what we did is a lot of people this week we tried to say Wednesday. This is probably where we're going to be for the time being. We're going to be at 6.5. People want lower and lower and lower, and you might be missing it. So right now I'm thinking the markets are going to be pretty stable right here. So if you're comfortable, looking at some numbers right now, if you're looking to buy or refinance, especially refinance, if you're at 7.5 or higher, please give us a call. Let us run the numbers. There's no hard sales. All we're going to do, and here, let's go to my website, and I can just show you something real quick. Or before we go there, this is a public service announcement. I guess I'll say it this way, and this is for all of us people in the real estate and mortgage business. From us to you guys, here's what we'd like you to do. If you're looking to buy a car or a home, what happens when the lender pulls your credit? Not me, but all the lenders. If you're going for a car loan or a mortgage, what happens is once your credit is pulled, your credit data, your financial data can be sold. So you want to stop that from happening. I didn't create this. These credit agencies did. Go to optoutprescreen.com. So what's going to happen is these are called trigger leads. When you apply for a car loan or a mortgage, we pull your credit, the data gets sold. There's going to be brokers, telemarketers, people that don't even know you. They just know you're looking for a mortgage. You're going to get probably 20 to 30 calls, and they don't know anything. They're just buying your financial data. You want to stop it? Just go here, pick. You're going to scroll down. I got to call you 3 calls yesterday, actually. You click here, Dan, and they're like, Dan, which one do you pick? I picked this one right here, electronic opt-out for 5 years. I think this is going to go through Congress and get approved. It is in process right now, and this will stop your data from being sold. That's the one I did. This one is by mail only. I don't trust the mail system anymore, so I just opt out electronically. That's what I do. But that's my public service announcement. Now, over to what I do. If you're out there looking for a mortgage, I'd love to help you. Okay, my slogan here is one application, one credit pool. We're going to compare your loan over 30 different lenders. Now, first I need to let you know who I am. I'm Dan Frio, like I said. I work at a federal bank, but we're set up with 33 other lenders, like a broker. Okay, but we're on a federal level, and I'll be the one working with you, and you won't have a broker fee, folks. So how do you reach out to us or just kick the tires? Well, go to therateupdate.com, and I challenge you to do this. If you're intrigued by this, give us a call. You're going to talk to Alan right up through here. If you want to ask me a question, just hit Ask Dan. ask any question you want. If you want me to review, here's what we're doing right now. We're reviewing people's loan estimates because rates dropped 0.25% in the last 2 weeks. So did you lock 2-3 weeks ago? Maybe you can get a better rate, maybe lower fees. So if you're looking for that, just hit my loan estimate review fee right through here. Let me blow this up so you can really see it. So right on the screen, you're seeing loan estimate review. Click it and just upload your loan estimate. I'll send you a personalized video right back, and I'll show you exactly where the rates are and what options you have available to you. So hopefully if we can beat them on the rate and the fees, we'd love to win you as a customer. Let's say you're looking to refinance and you don't want to play this anymore. I missed it. Oh, I missed it. Well, wonder if you can go in here and plug in your data and just let us watch it. I don't sell the data, folks. I actually monitor this on an Excel spreadsheet every day. All right. So hit the refinance button and just tell me about what mortgage you have now, what type and balance and everything, and what rate would you want to refinance. And when the rate hits there, I'll reach out to you. We'll run through the numbers, see if it makes sense. If it does, I'll get you locked in and we'll get the paperwork started. If it doesn't work out, well, wait, see if rates get a little bit lower. Okay, and even to the last thing is, if you're looking to buy a house, the one thing, before you do anything, check out this video. This is a grant program that we're offering up to $7,000, and it's basically free money. You don't have to pay it back. It's not a lien. It's not a gimmick. It's up to $7,000 on our Home Ready, Home Possible programs. So this is mainly for people with mid to low income, to just help them into buying into home ownership. Usually when you're buying your first home, you only need to put down 3%. Well, this program is going to give you 2 of the 3% you need for the down payment, making it right up through here. 1% down is all you needed to buy the house. So again, let's recap what we've seen so far this week. Folks, unless you guys have any questions, we'll go to the calendar. We saw not much here. The jobs report came in, the servicing number came in. This is showing jobs weak, or not great, and this is showing inflation ticking up. Nothing huge, but every little tick counts. Next week, we have an agenda full of inflationary numbers, from the consumer credit on Tuesday to the producer credit on Thursday, and also retail sales and the employment numbers. So we're going to monitor those meticulously to see how all those, folks, play a role in this. So if you're new to my channel, like I said, I did do a live event, I think it was Tuesday or Wednesday this week, explaining to you guys to why I go over all these pieces of the puzzle, because I don't like talking about the presidency every day and the Federal Reserve every day, but it's what's in the media. You watch right now, stock market's up 500 points because of tariffs. Well, that also has a role in these things. So I apologize if you guys take offense to some of my political views. I'm not here to do that. My whole goal is to help you guys understand this, and also join me on Stock Talk Tuesday, where we talk investments and other things like that. So let's go. Before we go, let's get over to our Yahoo Finance, the rate update portfolio for the day. So if you've ever watched me on Stock Talk Tuesday, or you don't, join us. We'd love to have you. What we talk about on Tuesdays is just stocks, bonds, cryptocurrencies, is in its basic terms. What's the Dow Jones? How do you buy a stock? What is this? So we go over our portfolio we created recently. If you guys missed out, I added a Pelletier in this Tuesday, and I want to go over those results for you. But let's look at our earnings on our portfolio so far. So today, what's it look like, folks? We got a pretty good day going, or what? Up 5. What's down 5? Our nuclear play is down 5. Other than that, Bitcoin's down a little bit, but other than that, here's our returns, folks. So Pelletier, we have a 3-day return of 10%. Some others 6 down. We're down on Hack. What is Hack? Let's see. Cybersecurity. That's odd. And then everything else, such as these investments down through here. But if you want to learn about these and how to invest and how to get returns like we're getting through here over the last 6 months, join me Stock Talk Tuesday. So, folks, that is it for me today. Hopefully I answered any questions you have. I will just ramble here for a minute or two. If you have any last-minute questions you'd like to ask me before I go, love to answer those. So let's get over and revise this. Stock market ended the day up. Let's see what we're looking at here, folks. The Dow Jones, all the way across the board, looking pretty darn good. Let's see how this pops in. Wow, nice day. 250 up here, 200 up on the NASDAQ. Good day through there. The VIX is down, oil's down, bonds are starting to stabilize. We were down about 11 or 12 earlier today, so we might get a little rate reprieve. And let's see if this bank, we had one bank actually post a little bit better rates out there. So 1 out of 35 lenders we have had cut their rates a little bit today. But other than that, it looked like rates were just steady as a pancake all day long. So that's our report for today, folks. I hope you enjoy it. Hope you learned something today. And most of all, I hope you have a fantastic week. weekend. So God bless, folks. Thank you so much for taking your Friday afternoon to join me. I will not be doing a closing bell. I got to get outside. They're painting my house today, and I got a whole bunch of cleaning up to do. So I appreciate you watching me and taking your afternoon to spend a little bit of time with me and asking